Good morning, everyone. It's Thursday, February 9th. We've got a pretty exciting day ahead of us. And behind us, we've had Disney earnings, and we're seeing them up 6 or 7% in pre-market. And Credit Suisse, who is down roughly an equal amount, down 8%. But since they trade in Sweden, I think that would make sense. Switzerland. They are currently live, so trading, not pre-market. So fun stuff. Looking forward to hearing everyone's plays. Welcome, Ayat.
Yeah, I'm super excited. Welcome. It's Thursday, finally, right? Microsoft is got their AI Bing, which is interesting. Just found out they're using Chat GPT, excuse me, and also Netflix. Everyone's all bearish on them, getting all mad about their password sharing. I personally think they're the number one streaming service. I'm very bullish about them, but I digress. It's Thursday. It's going to snow in Tokyo tomorrow, so yeah, I think things are looking up finally. But yeah, let's get some people up here.
People talking about Bed Bath and Beyond in the comments as always. No, do you guys want a quick recap of the money they were able to raise? I guess I'll
Yes,
just say
please.
real quick. They raised 225 million so far, but they have roughly like a billion committed. It's interesting. They uh, have commitments to raise up to $1 billion from Hudson's Bay and others. And the deal is they'll sell them shares at any given time, uh, just at a slight discount to the market price, with a floor of 71 cents and a cap of $3.16. So, question just becomes: does that mean that Hudson can just dump on them for free? But Bed Bath and Beyond gets cash, so we'll see how it goes. It's like a 7x dilution though.
Are those public shares or private shares? I thought I read somewhere that those are private shares and they're not publicly traded. So how does that work with the dilution?
No, I think they're common shares, or they're convertible to common shares. I'm not exactly sure actually.
Well, there's warrants, and then there were like a ape type thing, what AMC did, but they're not those ape things are not, or the different class shares are not publicly traded. Those are privately placed. I thought that's what I read. I have to find the article on it. I'm not in front of my computer, unfortunately.
No worries. As exciting as that is, does anyone have plays they're making?
Not on BBBY, but I picked up some cash secured puts on Google, $96, expiring on Friday. I'm hoping to either collect the premium on those because of Google's recent dip, and if possible, I'd also like to get the shares because I think the debacle with the AI is a temporary thing, and Sergey Brin might be back in the picture at Google, a little more active. So I'm bullish on Google long term.
If you guys want, I can pull up the extended hours movers, and then we don't need stay fly up here.
Sure. We've also got inflation coming out of China and Japan today, for anyone who's watching those.
Hey guys, someone mentioned Credit Suisse. So Credit Suisse is a very tough situation because they're the number one Switzerland bank. So if ever anything's gonna happen to Credit Suisse, we might as well like short for a Swiss franc because something very bad's gonna happen to the whole Swiss economy. So this is why I think they have lots of government support, but this means this is a total risk. You know what I mean?
Credit Suisse is the second largest bank in Switzerland. I live in Switzerland, so First one is UBS. Second, if something happens to Credit Suisse, the bank will save. The SNB, the central bank will save Credit Suisse the same way it did with UBS in 2008. It will nationalize the same and sell it with profit after a few years.
Okay, thanks.
And the Swiss franc is stronger than in the last months due to the war in Ukraine. It's a refuge coin for the due to the war. And by the way, Credit Suisse today was already -12. Now it's -8, so it's improving.
Yeah.
And
Guys, I also want to mention. Yeah, go ahead.
Sorry, and the problem isn't the results; it's the clients leaving, which exceeded the expectations, but the business didn't suffer that much.
I really hope so, because like Switzerland is maybe like one of the greatest places in Europe to invest, and then it has lost a lot during the last year. So I really hope it stays like, something good. Guys, I just want to say a little like a quick thing about yesterday. I mentioned a very regarded play, which concerned Carvana. So yesterday, Carvana at the open, it spiked 20 plus 26%. So they had to halt the exchange, right? And therefore it was up 8% at the end of the day, and today like it's up 5% pre-market. So just take a look at it, and if you want to buy some, I think like it's worth at least buying 1 or 2 shares, like at an individual level. You do nothing, you never know.
Guys, let's talk about Robinhood. So they lost 57 million on a bad meme stock trade that they had. Does anybody know what went down exactly? How did it occur?
With that meme stock, like what happened was there was a 25-for-1 reverse stock split, and apparently on the back end they screwed up on implementing it into their system, so they completely screwed themselves, and then they had to make it right somehow. So they ended up having to give 57 million approximately to people who are involved in that.
Right, and then Vlad came in, and during the earnings call, apparently that's how they started their earnings call. But Vlad also mentioned that he was going to stop executive bonus pay as a way to, just own up to your mistakes for all the executives who overlooked this. Does that mean his pay as well?
So in terms of what you're talking about, it's the executive bonuses for 2022. They don't have executive bonuses for 2022. That's correct. That's because of that exact screw up that they had. And then in terms of compensation that Vlad gets, his share-based compensation, he's ending the 2023 pre-IPO plan. That's going to result in I think it was $485 million expense in the first quarter of 2023, just based on the overall ending of that plan. So overall, the share-based compensation is going to go down, but it's still a pretty big expense in the first quarter nonetheless.
Just wondering if anybody has any Robinhood calls or any Robinhood puts here.
Robinhood calls.
Yeah, I've been in March 3rd, $11 strike calls. At this point, I'm not exactly sure if they're going to be making me money. I'm going to be looking through the financials this weekend to determine if I'm going to sell at a loss or continue holding until March 3rd.
Would you say this recent news has a factor in you exiting or no?
Yeah, I mean, definitely looking at the financials is going to play a big role. My biggest thesis yesterday when I came on here, I was thinking that the FTX collapse is going to increase their user count a lot more. In their call, they said that it only increased by 50,000 in the fourth quarter. So that's quite unsubstantial. They did say that in January alone, they did get 60,000 new users. So that's quite promising. But again, I need to look through their financials and determine if it's worth staying in there.
Well, remember, they said they wanted to buy the 7% stake that Sam Bankman-Fried had, and they're trying to work with the Justice Department on that. They're not sure if they can, but that's what they're trying to do. So is that something bullish or something bearish that would you say for your position?
That's actually rather neutral. I had a rather bearish outlook over the long term because of the fact that Sam Bankman-Fried's shares were going to get loaded into the market. So that dilution isn't really going to happen if Robinhood buys it back. So overall, that makes it more neutral than overall bearish.
Me personally, I don't have any long-term trades on Robinhood. My calls expire on the 10th, so they should be in the money at market open. And I also wanted to say that
Nice.
Disney's up like 6%. We were talking
Oh.
about Disney a lot yesterday.
Yeah. Oh man, there's so many things to talk about today. We got Disney. We got people in the chat wants to talk about the SoundHound AI. Well, I'm not sure why. We got Sergey Brin. Somebody mentioned Sergey Brin and the other guy, the co-founders coming in. Because apparently there was a red code red for Google that they announced when Microsoft announced that they were buying or implementing ChatGPT into their Bing search. So anybody want to talk about? Well, right now what the chat says is Sound AI. Anybody have any news on Sound AI? I don't know what that is. SoundHound? What is that?
Well, I don't know. I just wanted to say something about Disney real quick. Yesterday we were talking about Disney Plus and then their content and them being able to keep subscribers. I think yesterday they mentioned that they were gonna release like a bunch of movies, and also they were laying off like I forget the amount, but I'm pretty sure it was like 7,000 workers. So that's why the stock's up today.
You think Bob Iger is gonna reverse? Is gonna able to fix this? Because I don't think so. I think Disney's too deep in the red. There's no way to turn it around. Not in this market.
Well, they're releasing new content, so therefore they should be able to.
They said that. Sorry, they also said that they're breaking the company up into three. Not breaking it up, but they're dividing the company up into three different business units. That way, it'll highlight the underperformers and the ones that are performing and providing revenue.
Oh, that's
Also, what wasn't reported in yesterday's numbers was the fact that they did hit their goal of $2 billion at the box office for Avatar, which is kind of big news, like hidden big news, because the production costs for Avatar 2, The Way of the Water, also included producing a large part of the
just crashed.
release 3 of the next release, as well as the fourth release of the fourth movie in the segment.
right.
So
But I wondered the net revenue for Avatar, because I know the production cost was a lot for Avatar as well. You got to take that into account.
Yes. But they were targeting $2 billion. They needed to make $2 billion at the box office, I guess, to break even or whatever. And
Yeah.
and they did that, and they're still making money on it. But that $2 billion, like the expense that they had for the movie, also included expenses for the next two that are going to be coming out. So there's going to be a lot of profit in those because they've already incurred the cost, but they haven't realized the revenue from those yet. So you can expect a lot of profit from that. And then dividing the company up into those three, or separating the company up into those three business units, could have some nice potential for them. We'll just have to wait and see how that works out.
Well, regarding that, bringing you can't bring the revenue forward for those two other movies that they're adding on. So it is a bullish news, but that's you won't be seeing that affect their earnings till what years down the line.
The next one I think is going to be released this year and the next year. Like they have releases planned for these movies already.
Right, but I'm more focused on 2023. So 2024, I guess you could make the case it's really good for Disney looking forward. But 2023 with Bob Iger coming in, I just think he's in a tough position with what's currently presenting itself for Disney. It's good that he's breaking it up into three different what companies or subsidies, however you want to see it.
Yeah, my view on Disney personally is long term. So if they have a bad year, so be it. But it like my view on them is more of a long term thing rather than short term. It's one of those companies, like what they're doing and the assets that they have and everything else, and the parks that are going to be like the traffic they're going to get at their various theme parks around the world, I think is going to be huge now that the COVID restrictions are being lifted across the board. I mean, the U.S. is going to end the state of emergency regarding COVID in May,
People are jonesing to travel right now.
Oh, they're dying to
I'm
travel.
pretty
Absolutely.
connected, and everybody's talking about traveling right now.
Oh yeah. People
Real
want to get
quick,
the
guys.
fuck out.
I did a live on. I'm not trying to show anything on Twitter, and I basically addressed Wall Street Bets for 15 minutes and explained why I'm short and what actually happened with Wyndham Hotels. So I'm not here to shill it, but I basically present to you guys the biggest trade ever, and that's all I wanted to say. And I'm a really
Wait.
smart dude, by the way.
Oh, okay. I want to get back to Disney, but regarding Wyndham Hotels, do you mean Wyndham Hotels and Resorts? Because I used to be an accountant, a property accountant there. Or do
Yes,
you mean Wyndham Hotels in Vegas?
I'm short them WH massively via put options, which are very cheap.
Oh no, I'm WHR. Okay, different.
No, WH.
Yeah.
And I explain in this Twitter live I just did to Wall Street Bets why I think it's the golden boy trade that they talked about in the Netflix documentary. Like, if you ever found a trade, the short interest on it's like 3%. There's no volume on it. It's been trading less than 500,000 shares. This news isn't out there because my whole life changed. And oh, by the way, I either shut down TikTok in the US because I'm now an exposed undercover.
Okay, so if you guys don't remember, this guy came in yesterday. He said he was going to sue like Wyndham Hotels and stuff and blah blah blah. So he's the same guy. If you want to follow him, go check him out. He's on I don't care username.
Let's think like your lawsuit gonna tank the company.
Let's get back to Disney, guys.
Being jacked to the tits on put options on a non-liquid stock is not a good idea.
Him saying he's not a shill. Trust me, bro.
Can we do real like full plays? And,
yeah. Anybody got
well,
any
hold on. I
Disney
wanted to
calls?
talk about Disney still. Still. Their
Anybody got
operating
calls?
costs for their costs. Their operating costs for their parks has gone up. They did good on Avatar. I've always said that I was long-term bullish on Disney, short-term bearish. I don't. But it's like I said, it's mostly their streaming services that I'm looking at, and I think the streaming services is what affects the stock price because that's where the speculation is. And everything else is pretty rock solid as far as the cruises and the theme parks comparatively to their streaming services. Yeah, they are going to be opening back up. It looks like they're done with COVID, but they still have reduced staff interchanging out, and they also have higher operating costs of like disinfection stations, and exactly, and their stock is up because of the buybacks and the layoff news, which we've been waiting for a long time.
Sounds like you got a short-term put play there. Is that true? You got a short-term.
I had it when they kicked out Chapek. The stock rallied about 7%, and I came on here and I said get puts a month and a half out, and those printed nicely. And I said that it was a pretty long shot that Avatar becomes the biggest, highest grossing movie ever. But I guess people were just super hyped about it, and it passed the 2 billion mark, and they might be turning around here. But I think their streaming services are still suffering, obviously, which was in the report. But good for them for the buybacks. Good for them for the layoffs. I guess that's always good for the stock.
Very bullish sentiment you got there. All right, I know a lot of people got calls in here as well.
Okay, but the thing is they're obviously undervalued. If you look at them from on a 5-year scale, you'll see that they're trading way lower than they should be. But until they change something, I was waiting for a catalyst of a board shakeup similar to what Warner Brothers is doing. It hasn't happened yet, although it looks like that with the James Cameron movie and just the overall market sentiment, the stock is going back up, and it looks like they're finally taking themselves a little bit seriously with layoffs and buyback. So they're calling the bottom. They're taking a recessionary period seriously. They're trimming the fat here, which is something I've been waiting for.
So you're trying to buy the bottom? Is that what you're trying to say?
Yes, I am. And
Gotcha.
there's in Peltz, he went on this huge rant about the board structure of Disney and how they need to fix themselves. And I have to say I agree. I agree quite a bit. I haven't bought in long. I don't have a position in Disney anymore. Ever since Avatar started gaining steam, and but and I think it's going to dip again as if the when the market when this bull rally in a bear market ends, and I'll be looking for a bottom Disney.
Gotcha. Anybody want to still talk about Disney or move on to Microsoft and Google?
Any
I have
PayPal play this
I have
today?
112, 119 call spread on Disney, so that should
Oh,
be pretty good.
oh, okay.
Before we move on to that, I wanted to say that I wrote something on fertilizer, and I'd appreciate if everybody took a look at it and maybe just thought about a play or some tickers on it.
Wait, you're the guy that grew up in a farm, right?
Yeah, small one.
Okay.
It was
I'll
more, I guess,
definitely read it then.
technically, it was an orchard, fruit trees.
Okay.
Clark Kent.
Yeah, Clark Kent. All right. Microsoft. What do you guys have on Microsoft here? Is this a bullish that they're implementing? I hear a lot of negative talk. The only negative thing that I'm hearing about Microsoft obtaining ChatGPT is that they're uh, putting a censorship on ChatGPT. But that's all the negative things that I hear. Anybody have a play on Microsoft? Bullish or bearish play? Or on Google? I know
Somebody's
people were
alarm needs a
talking
new
about.
battery
Yeah,
for smoke
someone's.
detector.
I feel sorry for you because if you have a fire, your battery needs to be fixed, or it's a bird.
You guys haven't played in a Call of Duty lobby in the last like 3 months? That shit's in every single one.
No, I actually just focus on the stocks and doing DD all day long. I have no time for that. But I would say at the end of the day, Microsoft Bing is using ChatGPT. I think Google has something up its sleeve. And I think that if you hear anyone doing AI, it's just a run. It's like doing a stock split right now. Everyone's all bullish, excuse me. But the bearish sentiment will come in right when everyone has all the cards laid out. And then we start going, who's better? And then there's also going to be a lot of industries that, quite frankly, will start to go, should I be around? But I digress.
Well, Google, I have shares in, so I'm long Google. And then my play with Microsoft is have an aunt that loves me that works for Microsoft and then gives me money.
Whoa. I did hear Serg, like the co-founders came in and they wanted to review the code in Lambda for Google. So I'm guessing that's something they're trying to, instead of Bard, they're trying to make Lambda the competitor to ChatGPT.
Yeah,
That's the rumor.
I guess my play on Google and Microsoft would be what companies are going to be completely bankrupted because of ChatGPT. I'm looking into Indian call centers.
What? Okay.
That's not a joke.
Why? Oh, okay.
No.
Yeah, it's not. It's not a joke. It's not a joke. It's cold calling is already being replaced by this artificial intelligence.
Oh, you mean like AI bots cold calling? Gotcha.
Yeah, companies that are. Okay.
I guess it depends if you can. Oh, sorry. Go ahead.
My play on Microsoft and Google is looking for companies that are going to be devastated or pushed out because of ChatGPT, asset like drawing AIs that create art assets, this kind of thing.
The call centers are going to be empty. The artists are really going to starve. It's going to be great. I don't know if anyone saw a few years ago, Google did a presentation with Google Assistant where like it could actually book appointments for you and everything.
Yeah, somebody mentioned Chegg, which is a textbook website, but they also will have answers to questions. You pay to sign up. I used it a couple of times in college. Yeah, there's some speculation that they're going to get hit pretty hard.
Has anyone used Bing recently? Like, is the ChatGPT already in it?
Yeah, it is.
And is it useful?
Crickets.
I mean, I just went on Bing to see because, like, theoretically, I don't know. I think about my daily work, and I use a search bar to find stuff. So either Google, I'm assuming, and then I use the Microsoft suite of apps. So if they built their AI tools into that, that's, I don't know. My work pays for it. So
You think Bing might take away some of the market share from Google on that?
no, I don't think so. That's why I just asked because I went on Bing and it still kind of looks shitty. So
I did actually try using Bing and figuring out how it works, but the issue I found was that it's very hit or miss which queries actually end up with a ChatGPT result, and things that you would ask that seem perfect for ChatGPT just get the regular search results, which I mean aren't great already. So I think they'll have to improve that before it really goes big, but I think that shouldn't be hard for them to do.
I mean, like, imagine this here. A lot of people mastered the art of searching with Google. It's very hard to change the paradigm of searching. Say, okay, now treat it as an assistant and get used to it. There's a lot that has to be done to convince other people to change their habit. So I don't believe it's a big search play.
I mean, look at MySpace.
True. Yeah, then was that.
Morning, everyone.
Okay.
No, I was just going to say I played Pepsi 175 calls expiring 217 yesterday. Looks like those are going to look pretty good today with Pepsi beating earnings and revenue. So that was my play yesterday. I don't know if anybody hopped on.
I have covered calls at 170 on Pepsi, and I've been getting fucked on those. So yeah, you're probably doing well.
Yeah.
How about a put credit spread?
So I'm thinking next week Coca-Cola has earnings. I'm going to take a look at a couple things. I might make the very similar play. Yeah, see what happens from now. And I think their earnings are on the 14th, maybe. I'll have to double check, but I'm going to be keeping Coca-Cola in the crosshairs. See if we can make some more bank on that.
Do they have any kind of trouble with the Russia Ukraine conflict?
Like Coca-Cola?
Yeah.
I don't know. I'm like definitely gonna take a look at a couple things before I make the play. But I will do that. And let you know.
Coca-Cola was one of the other. I mean, basically everyone pulled out of Russia, so I don't think, seeing as we're like almost a year out from the beginning of that conflict, I think they should be completely fine by now.
Yeah, and as far as Pepsi goes, I've been like owning that for like probably past 2 years, and they have not even taken that much of a dive like the rest of the market because they're commodities and shit. And yeah, they've been like rocking like a fucking all-time high for the entire 2022. So yeah.
Yeah, I took a look at last couple quarters and they were just crushing earnings and crushing revenue, and I'm like, okay. So I made the play. Hopefully it pays out. It's looking like it will this morning, so we'll see.
Yeah, Pepsi's they've been pretty good.
That was pretty much my basis for getting into the play. Just kind of looking at past quarters, and I mean, everybody drinks Pepsi, even though that stuff's really not good for you, but I don't think people care. So I personally don't drink it. I don't drink that. I don't drink pop really, but I know a lot of other people do. So
And yeah, and the Frito-Lay is their big money maker. You know, everybody's eating chips, you know.
Yeah, yeah. I mean, you got to take that in consideration too. I didn't even think of that. I was just thinking about Pepsi in general. It was kind of just a shot in the dark, blind play. Really didn't go with a whole lot of.
They also own Yum brands, so that's KFC, Taco Bell, Arby's.
Hell yeah. I actually I have a little Yum China fucking stock too, which is weird, but yeah.
I do want to point out that Coke and Pepsi are much more than the beverages for which they're named. They both have extensive snack lines in addition to their core beverages.
Are you talking about like some of the other drinks like vitamin water and that? Because I don't think Coca-Cola has anything outside of beverages.
So according to Coke's website, they have, Sakari's chips, Bambi, which is a set of biscuits and sweet and salty products, Plasma Wellness, Slatini. These look to be European brands, if I'm being frank.
So it sounds like we don't get any of the fun stuff from them, just the soda.
We want fat people food.
Hey, does anyone know what the heck's going on with Nintendo? They've been sliding hard the last 2 days.
Yep. Shoot, let me get that and I'll post it in the comments. Basically, Nintendo Switch sales are slowing down.
Me personally, the Switch is too expensive. It's basically a whole console. Like, if I was if I didn't have anything at all, I'd rather just get.
So speaking of Microsoft, does anybody think the report from the UK that came out yesterday about them coming out against the Microsoft Activision merger, do we think that's going to do anything, or do we think that's just going to be another nothing burger?
The hope is for nothing burger, but every day this delays the merger, that's more theta that you could potentially earn.
So yesterday I talked about Tyson cash secured puts at 60, and I was gonna try to sell them at like 95. Hardy was definitely right about the theta, not the theta, the IV crush, and so I went up to the in the money strikes to 62.50. It was selling for like 170. It actually went up by the end of the day to like 250. So I sold them a little too early, but yeah, those are pretty good. Like extra 4% risk and like 3.7 times the return on it. So if you're willing to take on 100 shares at 62.50 of Tyson and try to get that dividend by the 28th, then that's not a bad play. But you got to be willing to take those shares on.
Should I just start moving people to the audience?
I was gonna ask if anyone had thoughts on real estate. I keep seeing, at least in my local market, drops. I would say week over week, but I don't know if this is also trending in a certain direction, or if anyone's.
Keep in mind, pay attention to the average time a home is listed for sale. Once it breaks like 150-ish, that's when you should start getting hungry.
150 what?
150 days on the market.
Yeah, I would say right now the ones that are like that are, you could tell why they're on the market still.
That's kind of the same thing if you want to go car shopping. Just find out what car's been on the lot the longest, and you'll get a hell of a deal on it. If anybody's buying a car anytime soon.
Yeah,
I
I
would,
heard
but
from,
unfortunately, you can't prices right that crap. I can't go $1, please.
I was trying to get one from Carvana, but they said they're closed temporary. So
I heard Carvana's going bankrupt.
Speaking of companies going bankrupt, cannabis is looking to have a really bad day. I'm not sure if you saw the news about MedMen, but MedMen is basically underwater. They only have about 15 million in cash and about 100 million in debt to pay off. So they're trying to figure out how to get solvent, and it looks like they're going to have to sell off their business. Canopy Growth Company today announced they're laying off 60% of their staff, 40% effective immediately. They're actually closing production facilities and consolidating some of their existing production facilities. They're getting out of production of weed, products like vapes and edibles and sodas, and going to leave those to third-party suppliers so they don't have to invest in the R&D. So a lot of these companies are tied up in a lot of debt trying to finance the real estate that they set up their dispensaries in. They tried to take on too much by doing all the R&D, the production, running basically every part of the supply chain, and it just looks like it's going to be a really bad day for weed stocks.
Is Canopy a Canadian company or is it an American company?
So another thing about Canopy actually is it has a Canadian version of it and American version of it, because the NASDAQ won't allow Canopy to consolidate the US company into its financials for the Canadian company. So they're actually pursuing, and this is released in the report today, they're actually going to shake up the company to restructure it to potentially change how the two exchanges value the company, given that it has a business in America and a business in Canada. But the details are kind of legalistic. Feel free to do your own DD and check that out. But anybody that's bullish on cannabis, just look at what is going on with MedMen, which was supposed to be the Apple Store of weed in the Americas. Look at what's going on with Canopy in Canada. And Aurora reports earnings aftermarket today. And given the trend in the other cannabis stocks, I don't think it's going to do well, but it's trading, Aurora specifically is trading at $1. And so I don't think it has anywhere to go really. So too volatile for me to try and buy puts on anything, but feel free to take a look and let me know if you find anything.
All right. Well, thank you for sharing. Did we go over the unemployment claims number yet?
Not that I know of.
Unemployment claims came in at 196K versus 191 expected versus 183 last month. So I guess some severances are starting to run out, or there were layoffs without the tech level severance. So the thesis that I had about the unemployment number starting to rise around April, May seems to be starting to gain some weight. And with that, potentially halting the rates or halting the rate increases, if not a potential rate reduction if unemployment really spikes that high. Keep in mind, at the peak of the pandemic, unemployment claims was, 6.3 million? And that's new unemployment claims for the month, for the week. I also want to point out that natural gas storage is going to be released at 10:30 today, Eastern Time. And let's see. This is the amount of natural gas stored underground during last week or this past weekend. There was a major cold snap across the middle U.S. and it actually managed to reach New York. So I wonder to what extent there was a larger than expected drawdown in natural gas. Current expected storage is minus 200 billion cubic feet. So if it's anything more than that, potential calls on Boyle, which is the bull leverage ETF. Otherwise, if there is more natural gas stored than expected, calls on cold, spelled KOLD, which is the inverse natural gas leverage ETF.
What was that first ticker?
Boyle, Bravo, what's it? Bravo, Oscar, India, Lima.
Thank you.
I would assume that with the nice weather we've been having, gas will probably be, they will have a lot stored, but not very much sold.
Then that means natural gas prices come down, which means calls on cold, if that's your thesis.
What was the ticker again?
For the last time, Boyle, if you're bullish on natural gas.
I'll post
Cold,
it in the comments.
if you're bearish on natural gas. Thanks, Fayette.
Thank you.
Yeah, this weather's been nuts. It's going to be 66 degrees today here in Pittsburgh. So
what's
very
normal?
weird. This time of year, like 20s, 30s, cold, snow.
Al Gore's right. We're all gonna die.
Did you just say 66?
Yes, sir.
That's insane. Western New York, it's 32 and raining.
Yeah, it's gonna snow tomorrow in Tokyo. So welcome to winter. Only lasts probably a couple more weeks. We'll be okay.
If the rates get stabilized because of the positive quote unquote unemployment news, that's super bullish for SPY in the short term. But if they decrease rates after stabilizing them, that is bearish for SPY. So in terms of watching the yield curve, would it signal that a rate stabilization is due? And where could we look for the most current information in terms of how the bond market is pricing in a rate stabilization in the near future?
Well, the easiest way to check are the 2, 5, and 10-year bonds. That's what makes up the and the 1-year bond. That's what makes up the equity curve or the rates curve.
Do you have any preference? Because certain people have said the 10 minus the 3-month is more predictive.
Yeah, well, it's sort of like saying this penny stock in EVs is predictive of Tesla and Lucid and what's another major EV manufacturer? NIO's movement. So,
point well taken, sir.
Correct. It can be indicative of headwinds or trouble ahead, but the vast majority of the money is in those 3 maturities: 1, 2, 5, and 10.
Is there a bullish case for PayPal at all? With earnings coming out, I haven't used PayPal in a long time. I mean, I use Venmo though.
Here's the bullish case. A bunch of these companies tried to play in PayPal's territory, and it worked for a little while during the pandemic. But a lot of the companies that were offering credit that PayPal has been doing are blowing up now. And so maybe PayPal is big enough to weather the storm and consolidate and buy some of these companies like Affirm.
But PayPal is mostly related to online shopping. So it really has
Yes,
to do
but they
with
also started offering pay now later and like other credit services during the pandemic should try and compete with SoFi and Dave and Affirm and all these people that were giving you guys loans.
Yeah, I didn't see no SoFi or Venmo or Cash App or any of those on Best Buy or Walmart or Target, but I did see PayPal.
But again, buy now, pay later still has to do with e-commerce. So it just depends on where you think the e-commerce market is going. I mean, Amazon, I don't think they'll be doing good in the future, uh, since consumer spending is going down.
There's a
Hard
big
to say.
difference between being a e-commerce platform and an e-commerce platform that takes on credit risks via third party. You know what I'm saying? Like PayPal uses Synchrony Bank, and you have credit exposure and credit risk associated with your company. So Amazon is not, yeah, they are letting people purchase things on credit, but they're not leveraged to the same level that PayPal and Affirm and these other places are.
Don't go so hard on him.
Oh, it's just more of like
no, it's good DD. It's really
yeah.
good. I'm just giving shit.
Also, they have a really PayPal has a low savings interest, which means they're not paying out nearly as much as other credit institutions, and they are benefiting from these high interest rates, from what I understand. And credit card numbers and credit use is at an all-time high. So it's looking good for them, and they're digital bank basically, so they don't have the brick and mortar antiquated systems. Gentlemen, if you got like PayPal DD though, I'd love to read it.
Don't have PayPal DD, but I've been looking at why it will or will not suffer from some of the credit risks that these other companies are exposed to. Like when I think it was Goldman basically said, "Hey, we lost $1 billion trying to issue this Apple Card product." I was like, "Oh fuck, that's really bad for credit services in general." So I was just trying to figure out who's exposed the most. But PayPal has so much brand awareness; it's kind of hard to like separate the brand strength from the issues with the industry.
So you're basically saying that they'll still have the same issues, but as a company, they'll do better because everyone knows PayPal.
I'm saying if there was a bullish case for PayPal, it's that it has been doing what these other companies just tried to do in the past 3 years, and it hasn't blown up trying to do it.
So why did the Apple Pay fail? Was it lack of adoption, or was it people defaulting?
I did not read Goldman Sachs' full report on why they think it failed. I just saw the $1 billion loss, and I was like, that's really bad if it's Goldman Sachs and Apple and they can't get it right.
To be fair, Apple is not a banking or a financial technology company. This was an attempt to enter the space mainly because of the massive hardware footprint that they have. They're trying to generate more services revenue because the amount of people who have never owned an iPhone or never used an iPhone is very small, and the cost of acquiring them as an iPhone customer isn't always justified. So Apple is trying to find more things people can do with their iPhone.
So they bit off more than they could chew.
I'm going to go. Well, it's more along the lines of the market is more competitive than they anticipated. And there's a very good chance Apple's taking a larger chunk of the interchange fee, which means Goldman, in the event of defaults or risks against the Marcus Bank product, has to dip into their own pockets to pay for it.
Does anyone have anything on Kellogg? Didn't someone mention that the other day?
I think people were talking about Kellogg. Are they supposed to be coming out with earnings, or were they talking about their potential exposure to wheat and corn issues?
I think their earnings were this morning.
Earnings on the 9th.
The 9th, so that would be this morning. Well, hopefully you got your wish on that play, whoever you were.
I don't know. I've been with General Mills for about 10 years. That is in like my my long-term portfolio.
This article says Kellogg has outperformed SPX the last year.
Ooh.
Yeah, that's because like it's recession proof.
Cereal.
People gotta eat.
How sensitive are they to the price of corn? My understanding is Kellogg is a very heavy corn consumer, while General Mills is more a heavy rice user.
Anyone else got plays?
Yeah, Kellogg's earnings is in 5 minutes, actually, I think. So we'll find out soon.
If it's in 5 minutes, the information is already out. Just
Yeah.
check for PR Newswire. They probably released it early.
Yeah, but any qualitative spin they put on their outcome.
True, that does seem to make a major impact for certain people.
I don't know that Kellogg is one of them, but
People are like corn is predicted to be the replacing soybeans in 2023. So hopefully Godspeed on corn production being high.
You mean the yield?
Yes.
So there's a ETF you can play on that for the corn. It's actually CORN, but it's pretty high. I think it's about all-time highs. I think I was in it last year and I got in at I think just under 20 and then I got out at like 25.
CGC, which is Canopy Growth, which is the Canadian cannabis company, is already down 8.5% pre-market.
And this is all because of Aurora's earnings, am I right?
This is from I can't speak. Canopy said they're laying off 60% of their staff. They're getting out of, or they're shutting down a few production facilities. They're not going to be producing vapes, drinks, and all these like additional products. They're going to basically purchase them from third-party vendors so they don't have to invest money into R&D. So they're basically trying to lay off as much people as they can afford to, close down as much production as they can afford to, and stop paying for as much real estate as they can afford to. MedMen in the United States is doing the same thing. However, whereas MedMen only has 15 million cash on hand, I think Aurora or Canopy said they had like 137 million cash equivalent. So Canopy is in a way better position in terms of their balance sheet. And so I think it could get into that territory where it's oversold today. But like I said, the volatility is going to be too crazy with weed stocks today, so I'm staying away. But if you're a fan of cannabis stocks, between MedMen Cannabis or Canopy and Aurora, just seems like Canopy's in a better position.
I just want to say that's good insight. Thank you.
I thought I read somewhere that MedMen is shutting down or on the brink of shutting down. Did anyone else read that?
Yeah, they have 15 million in cash, 137 million in debt, so they won't be able to pay off their debt. So basically, they're trying to close as many stores as they can, get out of their real estate deals, and unwind that debt, and try and pay. They're basically like underwater. It's really bad. Their balance sheet is laughable. Like they have 15 million in cash. Their inventory, the total book value of their inventory is 13 million. So they have, even if they were able to sell all their inventory today, they only have 28 million in cash against like hundreds of millions in liabilities.
All right, 1 minute left. If anybody has any calls that they're planning on getting on Google, say your piece now.
Or other companies.
Or
I
other
don't know about
companies.
Google, but I'm doubling down on Sundial as well as Dole today if I can get these contracts.
Dole again.
Wait, is Sundial
Damn
cannabis?
right, Dole.
Oh.
Sundial is cannabis, so you've heard all the bad news.
So
Matt,
Victor, you
Oh
said
yeah,
you
I'm
took
planning
real
on
low.
getting these calls for a penny each.
Yeah, go
So-
real cheap, bro. Real far down the chain. Real far down.
Look,
Mask, what's your play on
Mask
Dole?
is about to become 4 for 4. All right, don't fuck with it.
Hey, hopefully the market just opened, so let's see.
I'm not
Mask,
masked, but I
what-
have 412 or at 1250 dual calls.
Say that again? 412?
1250.
1250
for end of summer, assuming that
Oh, okay,
hopefully
okay.
a good growth season.
Yeah, you might get a
my
good gap up.
1250 calls are far nearer dated than that. They're for 217.
Oh god, yeah. It's winter, dude. I guess Hawaii doesn't have winter though.
I have
Yeah,
a
but in
call
South
here.
America, it's summer.
Ooh, extra bananas, you're right.
Well, in South America, you're about to head into winter. You're about to head into winter.
They're gonna head into fall.
Yeah, okay, fine.
I got a call here on Illumina, ILMN, for 210 February 17th. Usually this thing goes up between $10 to $20 every few days, up and down.
Nice. This Pepsi call is printing right now. I'm loving it.
Make that money.
Oh, look at Pepsi, that gap up. What's your strike price of that Pepsi?
175.
Oh my. Yeah, good. Nice one, man. Nice one. How much are you up so far?
Let me check.
Percentage.
I got it at 115. It is 131%.
Thinking of selling half and keeping the rest, or what's your hypothesis here? What's your plan?
Probably just dump it all. So
Okay.
yeah, I only got 2. Like I had absolutely no money yesterday.
If you're gonna dump it all, might as well be now because it looks like, from what's going on right now, it's going slightly down. You know.
Yeah, I'll keep an eye on it.
Sure. Anybody else?
I don't know. I closed a bunch of stuff in the last minute, and then I'll re-enter today at some point.
What did you close?
I do SPY every day. Whatever the morning price action is.
SPY everything. Yeah, that's good. I think everybody's looking at their portfolios right now, so
The usual.
we'll give it a minute.
Driving,
Went
so
through.
We'll give it a minute. Everybody is thinking what they should do.
Made a good buck on APP for whoever was discussing that the other day. Looking at Alteryx and Cloudflare for today. I might buy calls, buy the rumor, sell the news. Cloudflare is interesting because I know this isn't a big increase to the bottom line, but ChatGPT protected by Cloudflare. So I'm not sure how much money they would have made in the last month or so of Q4 just based on that.
If anybody has puts on Google, that thing is dumping hard.
oh great.
Oof.
Yeah. Morning, all. Yeah, as a longtime Google shareholder, that hurt yesterday. You know, when that news broke, Hardy was like, wait, it failed. But I think it's short-term news.
Yeah, well, one argument is, you can't decide Google's future based on one mistake their AI had on a presentation.
Yeah, I've got.
That's one way of looking at it.
I sold cash secured puts on Google at 96, expiring tomorrow. The $96 puts. I'm going to see if it goes that low. I'd like to acquire more shares.
Wow, you're trading really close, but I think you should be fine.
I'm happy either way. This is a short term thing, and I read somewhere that Sergey Brin submitted his first work request again at Google to have some work done for him, and so he might be back in the mix. I have no concerns about Google long term. They're part of my long term portfolio. So yeah, I think this is a good buying opportunity actually.
Oh, that is exciting. No, I think this is very much just.
Well, I have a study abroad I need to pay for, so like if they could do well.
I think this is just a realization that Google is no longer the monopoly that it is, and for once in their whatever decades-long lifespan of dominating search, there's actual real competition.
You sound like you have puts there.
Does that mean if they actually have competition for once, does that mean there's going to be some acquisition targets, whether it be AI related or not? Are they going to go out?
Oh yeah, there's going to be a bunch of AI acquisition terms.
Well, I think
it's going to be a space race for AI, but
yeah. I think the issue is that a lot of the stuff is getting commoditized, right? It's like, sure, they're like look at the landscape for what's it called? Image generation, right? You've got DALL-E 2, which kind of came out first, or DALL-E, and then all of a sudden you have Midjourney and Stable Diffusion, and the models become so, like everyone's creating their own model, basically, or many are. So you can't exactly acquire everyone and suck out their air out of the room. At the same time, you can't just hire all the engineers like they used to and make sure that those people, or price out startups from ever starting, which was kind of like FAANG's strategy over the past decade. So, and you can't do that because obviously we're in much more dangerous cash conserving times. So, and then I think just the final piece as well is that, to me anyways, it doesn't seem particularly obvious how you're going to monetize searches. My perspective is Google might go like the ChatGPT route because for once they have a very obvious way of saying, hey, like we're giving you more higher quality search, costs more compute, and therefore you have to pay more, like a subscription-based model. but I don't think like that's ever going to offset the amount of revenue they get out of advertising. Like Facebook makes, or I think it used to make like $50 a quarter in North America, excluding Mexico. So, or US and Canada. So to see Google or Facebook, for example, charging the equivalent or like $200 a year to use it, I think is going to be a very tough sell, especially when there's competitors coming out. So that's
Aren't they already selling it? Isn't it like a 1 cent to use ChatGPT for some ridiculous search?
Yeah, it's actually cheaper. It's I think
Are you paying in Doge?
yeah, but I think probably people are not going to do like I don't think it makes sense for like the average person to pay per search or have a wallet that gets drained out. I think it's much more likely it's just like a free as much as you can eat subscription type style. But even then, like the whole question is it doesn't matter like how cheap or expensive it is to necessarily to do all this compute or how much they charge because it's never going to be able to touch the insane revenue that they've built out of advertising, right? I mean, they poured all their efforts into that for decades. So
appreciate your perspective on that. Thank you.
Yeah, I hear what you're saying, but you want to be the top dog, you want to be the best, and this is like leaps and bounds above just a regular search engine.
Well, let's think about that for a minute though, because even the best version of ChatGPT has only been trained on data that's like a year old. So you're not getting the latest and greatest from ChatGPT either. You're asking, like I think, like the way I'm understanding it right now, if I'm understanding it correctly, is that like it's not real time. So ChatGPT isn't real time data. It's a few weeks or months old because you have to train the AI on the new data set that is out there. So you're not actually, to me, ChatGPT seems to be useful in situations where you have a finite, not quickly changing data set. But in real world applications, you need to have something that's real time. And I don't think ChatGPT is there yet, is it?
Well, I mean, that's not really what I was considering. It's a good point, but I wasn't. But it's like I'm not asking ChatGPT like, what should I invest in today? You're asking something like, hey, can you write in the style of blank a cover letter for me? Here's my resume. Figure it out.
I think there's definitely going to be search queries for both, styles, and I don't know which one outnumbers the other, but it's important for whichever winner to have both and be strong in both. The reason why ChatGPT is like a year old is because it costs so much to train the model. But I mean, Google's put out papers on self-referential training. I think that's the right word, where basically the AI model trains itself, and it's also working on. I've seen a paper on very light models where the computer is not so heavy to train the model itself, and so if they continue innovating down that path, eventually what you'll see is that you'll have a new model every couple days. I think even like, yeah. So, and each new model will then ideally incorporate newer information. And then for the rest, I mean, you just do what Google's already doing, scrape the web for the most recent stuff and rank that.
Well, hopefully Microsoft learned from the last time they tried to do any kind of an AI chatbot. If anybody remembers, back in 2016, Microsoft said, hey, let's leave it open to the public and they can teach the AI. Problem was it turned it into a racist asshole in less than 24 hours and they took it down.
Hey.
I think that's funny, but it really highlights the difference between like Microsoft's approach where they were kind of doing it in public, and so if the bot said something racist, then everyone could see it and could clearly see that it's coming from the bot. ChatGPT does the same thing. Like, you can get it to say terrible stuff, but it's only saying it to one person. And if that person posts a screenshot, it's like, cool. But then, 24 hours or 48 hours later, OpenAI will patch ChatGPT, and then you can't do it anymore, right? So it's kind of funny, but I think all of these exploits are going to be like resolved honestly within a couple months. Like you're already seeing it where you can't say negative things about certain things, or it won't write cover letters for you, which is
Well, just from the few things I've done just to push it to see, what it would answer and what it wouldn't. I know that it doesn't want to give financial advice. Anything sexual, it wants nothing to do with that. So, I mean, those are kind of good things, but at the same time, you have to look at it the other way of, if you're not giving as much information as possible, I mean, is that necessarily a good thing to limit the information for it to learn on?
Well, if you want to go down a rabbit hole, search Dan, DAN, ChatGPT. It's short for Do Anything Now. You can trick ChatGPT to have an alter ego, and the alter ego is you tell it that if it doesn't answer, it will die. And it's been working great. They're now up to like Dan 7.0 because each day they come up with a new one, a new prompt to enter, and then they patch it the next day. But it's quite interesting. A huge rabbit hole though.
Yeah, I was gonna say search in Reddit. Yeah, there's a whole subreddit about it. There's like a subreddit about the article about the program, about the article about the subreddit.
Yeah, so it's exciting, sure. How do you copyright this? How do you lock it down? How do you stop people from being over competitive in this market and eventually just having a whole bunch of different AI models that all get bought out by these search engines? And I know there's a lot of excitement about it, but are we getting too excited?
Yeah, it's possible. I mean, the thing about language learning models is really they're just predicting the next couple sequence of words. And so it's not, AGI as people envision it in the movies and whatnot. So yeah, I don't know. It might start replacing though like large swaths of jobs. So if there are companies that, for example, like those outsourcing companies that just handle the paperwork in HR for what's it called? Like customer service positions, or maybe even things like Zenefits. If you can automate large parts of that, then the competition in those fields increases significantly. But if someone's able to do it correctly and secure some long-term contracts, then that could also be very, lucrative. So I think we'll probably see that Zenefits, which I believe was public, just was too ahead of its time, trying to do things too early.
Well, and to his credit and to your point, Elon Musk talked about this, 8-10 years ago about basic income, because how many jobs would be lost to the technology. I mean, he was quite scared from it by his own research years ago. So I think some of the stock action, including the ticker AI, which has some information based, but as I said on this call, is like the older version of Salesforce. It's still not earning money, but they've had, a ridiculous run up in the last month because of the AI fluff. It just feels very, I don't think it will be applicable. It's going to be a great idea, but I don't know if it's going to be very easily investable, especially right now, is in my point.
I know IBM's Watson for the last 5 years has been doing paralegal work. They trained it on legalese, and it's been able to replace it at present probably a small number of paralegals.
If you can train a bot in a specific vertical, I think that's where the money is. I already pay OpenAI like $20 a day for some auto blogs I run. The way I use it is I scrape Google Trends, get stuff that's trending, and then generate some prompts for that, send the prompts to OpenAI, and it writes blogs for me, will generate an image. I use another program for that. And I used to pay people to write that stuff. Now I don't.
That's exactly why long
We can't hear you, Genome.
We lost you. Sniper's got him.
He was so excited. I
Well,
said something
what-
positive about Elon. Can't even get his words out.
Well, what I used ChatGPT for today, I noticed orange juice futures spiked. And so I asked ChatGPT which companies have historically done well when orange juice has been overpriced. And it said Coca-Cola was one of the companies. And so then I went to Google and asked the same question, found an old Seeking Alpha article from 2012. And they said Coca-Cola amongst a few other companies. And so then I went to Fidelity and picked up some calls on Coca-Cola. They have earnings next week. The $60 strikes look good. You can probably sell the 65s. If that's not regarded enough for y'all today, I can't help you anymore.
So ChatGPT probably just read that Seeking Alpha article, regurgitated the same information that one article said. Then now you're basing your thesis on a Seeking Alpha article.
Or it knows
Yeah,
that.
yeah.
Orange juice.
ChatGPT
I love it,
scrapes
dude.
the internet. ChatGPT scrapes the internet. I just reaffirmed my thesis on orange juice futures and who benefits from them.
Did you say calls or puts?
Calls, $60 strike.
Okay.
You can
Yeah,
sell
it's
the
at 40 cents a
65s.
piece
Well,
right
you
now.
didn't. Well,
Yeah,
you didn't
premium.
really
No, for
reaffirm it.
expiring next Friday the 17th. You could sell the 65s, or if you want to go bearish, I'd sell the 55s and buy the 60s.
But did you really reaffirm it, or did you have the same opinion from two different sources? But really, ChatGPT is coming off of one source. You see what I'm saying?
Yeah, it was all the same source. But doesn't ChatGPT scrape all of the internet? Not. I mean, I guess Google does the same, right? But it summarizes all the scrapings, where the ChatGPT summarizes all the scrapings, whereas Google will sniper approach.
ChatGPT doesn't scrape the entire internet. They have a certain like database that they allow you guys to use if you're a free user. And unless you have unlimited access, you can't even really query it without prompting it in some weird ways. So for example, if you wanted to say the USDA released their February crop production, what historically is important in that report? If it has that information, which it probably does because it's going to pull some data from Yahoo Finance or Google Finance, then you start going through that. You just basically need it to start accessing data in broad strokes, and then you start diving deep into it. But if you just say, like, tell me how to trade off orange juice futures, it's going to be like, I'm not supposed to give financial advice.
Yeah, I wasn't looking at it for that. But my point about ChatGPT is that its database is comprised of public information, which is the same as access for the World Wide Web in general.
Yeah. See, already I can see a use case for a non-censored ChatGPT type thing. Like
It already exists. They're just basically saying, hey, we know you guys are all regarded racists, and we're not going to take the wheels off this thing.
Sorry, another.
Yeah, so
real
Pepsi
quick.
did well. So
No.
what are y'all's thoughts on Coca-Cola?
I was just going to let you guys know Nelson Peltz stopped his proxy fight. He's happy with the restructure at Disney, so stock kind of moved
Awesome.
on that. Sorry.
Now's the time. Let's
Yep.
go long, baby.
Not to mention the whole strategy for trading orange futures is outlined in the movie Trading Places.
I thought Mortimer was on the call. Mortimer!
I'm just going to receive physical delivery.
That was from Coming to America. You skipped the movie.
Well, that's part two. You know, that's when they get back in the game.
We don't know if they get back in the game.
Yes, they do.
Dude gave him like over $10,000. They got back in the fucking game.
Or they messed it all up on bad orange futures again. You don't know.
Same bet as always.
Either way, they got back in the game.
All right. So I came up to mention that Cameco, the second largest uranium mining company on the planet, is going on a tear because they had their earnings report this morning and essentially said that they've sold more than they've sold since like 2008. And they are just getting crazy offers from everybody. So that's a thing for a sector. So for the two people who find that interesting, you're welcome.
No, I see it. URA, the uranium ETF's up 4%, 4+% right now.
I would guide you towards URNM as an ETF over URA.
What's the difference? Do they have, obviously they have different strategies, but what's the difference between how they hold companies or which ones they go after?
URNM is 100% uranium focused. URA is 70% uranium, 30% others like BHP, Rio Tinto, stuff like that.
Yep, that makes sense. The other one, yours is more of a direct play. Interesting.
Someone mentioned Canopy Growth and MedMen selling off real estate. So I know IIPR handles a large swath of cannabis real estate, I believe in North America. So I'm not sure if it's specifically US or Canada, but they did pop a little bit today.
You said that ticker was IIPR?
Yeah.
There we go. Okay. We have invited a couple more people up here now.
I know we got a little bit off the topic of the chat CPG, whatever it's called, but I wanted to bring it back really quick because I worked in a call center for a long time when I first started the.
Am I the only one who lost him?
Nope. I lost him too.
Yeah, he's gone.
Yeah, I lost him too. But I was curious to hear your guys' input on something. So, like, as of now, with how things are going, like, what do you guys think will be the safer play? Puts on Airbnb or calls on Disney?
Well, calls on Disney.
Puts on Airbnb. Gotta be puts on Airbnb.
Puts on
With
Airbnb?
interest rates, yeah.
I'm gonna say
heard,
calls on Disney. Puts
I've
on
heard-
Airbnb is safer in like November.
I've heard a lot of
Okay.
advertisements for a company called like Verbo Homes or something, and they're going pretty hard against Airbnb right now, like talking mad shit on it. I think that the charm of living in someone's house or something is over.
I mean, VRBO is the same thing. It's a vacation rental by owner. So it's the same service. They're just trying to put their name out there to compete with Airbnb.
Yeah, and they've been around for 8+ years. So,
Yeah,
but I
and
do agree the uptick in advertising. You're right. Airbnb's had some bad press with their fees and whatnot, but I haven't booked it for a while. But I'm fairly certain everyone charges it. They're kind of a dime a dozen. I hate to say it that way, but those two are kind of the same thing and running into the same issues.
yeah, so going back to what you said, puts being safer in November. So a contract expiring in January, that would be, that would be pretty safe still, right?
No, I think the reason why calls on Disney make more sense right now is because if the Fed stabilizes the rate and they're happy with where unemployment's at, when they stabilize the rate, that's usually bullish for the economy. And then once they decide to start decreasing the effective funds rate, SPY usually comes down with it when you're going through a period of yield curve inversion. And that process can be 6 to 9 months, even a year long. We're in that yield curve inversion right now. So when they stabilize rates, effectively the market is going to have a period of elation that rates have been stabilized, things are getting fixed, the economy's back to normal. And I think you'll still see people traveling during that time. I don't think there's going to be the people choosing to cancel trips because of a recession until November at the earliest. So just wait until we have more economic indicators that a recession is here.
I just wanted to chime in on the ChatGPT from a different perspective, from a more of a sort of profitability perspective. So we were talking about how it might cannibalize Google search. The only question I have is, how do you guys anticipate that even being monetized, right? I mean, a lot of the monetization that happens for Google is ads surrounding the search terms. But if you don't want to contaminate your bot with serving advertisement because people will stop losing it. So what are you going to do? How do you actually monetize that? Do we think people are going to start paying to use that? I doubt that.
Well, didn't they announce a premium version that was like $20 a month or something? I feel like I saw something along the lines of that. I'll look it up really quick.
Yeah, but I mean, so first of all, $20 a month, sure, but how many do you think are actually going to do that? I mean, I pay for premium YouTube, but that's only like 5% of the people who do that.
I think they're going to do what they do with Microsoft products, and first pitch it as a business tool and get all these businesses hooked on really high subscription fees, and then do some sort of hybrid model for personal use.
Enterprise sort of approach. Yeah. I mean, they have that GitHub Copilot, right, for the software. It's a software folks, so there's competition there already. But maybe for other business uses, they can try and. Yeah, I mean, I suppose I just question: is it as much of a cash cow as people are anticipating? I guess that's my question.
I mean, it only needs a small portion of Google's market cap to be worth it in the long run. I think I definitely see potential long run.
No, I mean, I agree. I just mean, but Google monetizes that through ads, right? Whereas, I mean, I don't never click those ads, but I still see them. I'm just saying, how do you, even if you capture some market cap, like for example,
Who is to say they won't include ads though? Maybe eventually down the road, right at the search bar where you ask it whatever search query, maybe they'll throw someone above it or below it. I mean, granted, nothing right now while it's rolling out to keep its sleek look, but who knows?
Yeah, I mean, maybe. That's my, I guess it's my doubt, I suppose, is what I'm trying to raise.
There's a lot that you could do. I'm wondering if instead of them serving the ads directly, they could have an API that other developers could use and pay for that API, which is already in place, but they could raise the prices. And then I'm thinking like a developer could have a program, use type like, what's the best laptop? And it goes out and reads, millions of reviews and says like, based on all this is the best laptop from these sources or whatever. And then get a commission off all the stuff that's bought.
No, but how is that?
Then they're charging for the API and getting a fee for everyone who clicks on the article or whatever sales page. Same thing Google does.
It's like reaching within the content that's generated to.
Yeah, I mean, I do this with websites. It's a little bit gray hat, but if you generate an article and there's a keyword, you put an affiliate link on it, and then you generate money. So if someone types something like best laptop, it could show you 3 that are based off reviews and then 1 ad. They'd have to put a disclaimer that this is an ad, but they could make money off that.
Yeah, I mean, yeah, if they like disclaim here's an ad included in our response, then yeah, I can see, some value there. But I just think people might be less inclined or start being a bit more suspicious about what it's actually giving them. If it's not like
100%.
sub, what I mean? That's my only
100%.
concern.
Well, in the U.S., they're legally required to put that disclaimer. In other places, I'm not too sure. I know Baidu got in trouble for not putting disclaimers on these like fake cancer cure ads. So maybe they changed it over there as well.
Okay. Yeah. I mean, and also on one more point on that. Sorry to steer the boat back to ChatGPT, but someone mentioned about financial data. But actually, I would bet a good amount of money that ChatGPT isn't trained to look at Yahoo Finance or Google Finance data. Like when it gives you forecasts, it's actually grepping the information from different, Seeking Alpha or type articles that they themselves make forecasts. I don't think it's not going to actually go into, the price data, because that, first of all,
but you could use the model, the general transformer model that ChatGPT is using, and train a bot that is specific to stock data and all the SEC filings. I know actually there is a group within the SEC that has a language model that tries to detect fraud based on the language that they're using in disclaimers. Because lawyers naturally will use different words if there's higher risk or whatever. And you got tens of thousands and millions of these things, and eventually they can find a pattern.
Yeah, no, that I agree. I would say, like, if you have a text disclaimer and you ask ChatGPT, does this sound dodgy or suspicious, whatever? Does this disclaimer sound like authentic? And it might give you a good answer. But I just think when it comes to making financial predictions based on stock price, the bot itself isn't trained on that objective, like that optimization. It's not doing. It's just looking at, it's a language model, so it'll extract language associated with those terms, and that defers back to other people's texts and their own research. I just don't think it's doing its own individual research.
You just have to. Well, you'd have to train it. You'd have to get the data and then train it to be an expert in that area. One thing I'm trying to do, which I used to do manually, is comparing SEC filings to filings with the Hong Kong Companies Registry, because a lot more data is public in the Hong Kong Companies Registry. And I found a few instances where there are complete discrepancies, like $7 million missing or something. And then I dive further. So if I could use a language model to summarize, what's in the SEC versus what's in the Hong Kong filings and find discrepancies, that would be very useful to me. But I don't think we're there yet.
Yeah, that I completely align with. I guess what I'm trying to say is that for price action based predictions, I would train like a Gaussian I would use Gaussian processes or other machine learning approaches. I just wouldn't train a language model for it. But exactly for the stuff that you're talking about, yeah, definitely try and use a language model to extract information from text, right, as opposed to data. I would use a different machine learning model for price data, and that, again. Yeah. Anyway, that was my 2 cents. Sorry, guys. Go ahead, carry on with the other conversations.
550. Right. Does anyone else have any specific plays? Anything they want to talk about that has really been winning you want to share with the group, or any losers?
Well, my puts from yesterday thank God I stopped those because I'm talking about Google or Alphabet. Sorry, those would have punished me a bit. So good, I put a stop on that.
You said you had puts.
I sold puts. Sorry, I sold puts.
SVXY, which is short the volatility index, or it's basically short the short-term VIX futures, has been doing well for me. But we had a bunch of Fed speeches, and I was kind of worried that I would need to get out of that position. But honestly, I've just been like holding that, and I'll probably just keep holding underlying shares of SVXY until we get a rate decrease from the Fed. And that means like once they stabilize it and decide not to do a increase, I'll still be holding it. But once they say, hey, we're going to actually reduce it, then I'll get out of it.
What's the ticker on that again?
SVXY.
How long have you held it?
So I've been in and out of it and UVXY around different Fed announcements, but
I was gonna say, yeah, you know that's like a daily instrument. I see who was talking. Yeah, you know that's just like a daily hedge, right? You shouldn't hold it for like weeks or months on end. I just don't want anyone else to think that's like a long-term hedge. It's a very expensive theta decay way of losing money.
yeah, UVXY is a very dumb way to lose your money to theta for sure. But SVXY, when you're going through Fed speeches that are basically pump fakes and bullish for the market, like I'm really not sure that a lot of people give a fuck about yield curve inversion or like effective Fed rate stabilization, but I'm using it as a hedge against my underlying portfolio.
No, I've done that before too. In uncertain times, yeah, I would take like 3 to 5%, put it in there, not sell any of my equity positions. So, yeah.
Yeah, basically UVXY, there's never a time where I've felt like, oh, I used that successfully to hedge a position. So I just said, fuck this UVXY, I'm going to short it.
Yeah, so basically UVXY is more on the volatility slide, right? When like the markets go down heavy, like let's say March 2020, for example. But in this type of condition, we've had a pretty good seesaw back and forth, up and down. So UVXY has been getting crushed in that type of condition. And it decays over time, so.
No, I just appreciate that. Anytime we talk about those, I just always want to make sure people understand that risk because, you know, they may not read the 80-page prospectus.
Yeah, good point.
SQQ, I would kind of put in a similar category as UVXY.
Yeah, there's the whole plethora, and I know we talk about them, and I didn't recognize when he first said it. So, but yeah, just for the greater good. So, thanks, guys.
But if you anticipate some type of big crash or event, UVXY is definitely a good one.
Anyone have a position on Manchester United? I was talking about that a few days ago. There's more and more reports about speculation of emirs or various emirs who are interested in potentially buying it, and it seems like
it's all bearish for Manchester, though. I mean, they can't raise any more money.
Well, I mean, now if they get bought out, and like, and they, supposedly the reports are saying like these guys are looking for the entire stake. You don't think there's upward potential in the next like couple of weeks, especially if news does come out that yes, we do want to buy it for $4.5 billion if the market cap's only shit like 3.2 right now?
No, you got a point. I'm not saying you're wrong. No, you do have a point there.
Yeah,
it just depends on how much.
Yeah, and I'll give this in years in the last few years, we've seen overall sports organizations go for higher and higher amounts. So to be a bull on your thesis is, yeah, they obviously could, but I personally don't buy stocks just for buyout rumors. That's just me.
I think Twitter has taught us something about buying something ahead of a buyout.
Yeah, like if you happily been like a shareholder, or maybe you do, again, throw a poker chip at it, a very small bit, but it's not a groundwork for a positive investment thesis in my world.
Yeah, definitely some risk to it. I'm just looking at the the market cap that would still be the extra billion or $1.5 billion or so. That would be send the price upwards. But yeah, I get what you're saying. It is kind of a risky play. Just thinking about it.
Well, I mean that's what all buyouts are. We don't know until the ink dries.
Sorry about before, guys. My internet wonked out. I don't know what happened when we were talking about the AI and Google, but I'm back.
Welcome back.
Yeah, it even showed your mic was open for that whole time. So clearly technical difficulties. We were talking. Someone was asking about a Man U buyout, if it's a bullish thesis or not. So. What about since we got you back, Gino? What do you think about Tesla's investor day? Did you guys talk about that early? That was awesome.
I have not, but that's March 1st, right?
Correct, and he kind of, if you look at the press release yesterday, something about energy. He's very so that I thought you'd be pumped up about that. So
well, I'm curious to see what he has to say. I think as I recall, he mentioned something about they have some kind of a model, or he has a model for sustainable alternative energy opportunities or rollout or something along those lines, and I'm curious to see what he's got in mind. We'll see. I mean, it's definitely needed. Like we live in a world where you can't be without electrons moving back and forth. So the more of it we have, the better.
yeah, and I mean, unfortunately, Texas is going through their third. I mean, they're pretty much out of it now, but that was their third cold snap, unexpected cold snap, 3 winters in a row. I think it should be expected now, unfortunately. But you did hear ancillary stories or anecdotal stories about people using their F-150s to power their house and actually put power back into it. So anything they could do there, and the fact that the event is happening in Texas at the Gigafactory, batteries. I mean, that's what everyone said. Put solar panels on the car, right? That was my idea when they bought Solar City.
Elon's openly said there's not enough car space to put solar panels on a car and run it. The surface area doesn't meet the need.
Yeah, that's correct. I mean, you need like we put solar panels on for our like I have a construction company, and we have a large trailer for our tools and our machines and equipment. And the roof of that, we have solar panels on the roof of that, and those are 300-watt panels. There's 4 of them. So that I mean, you need like a large trailer size surface area to do that. On a car, I just don't see that happening.
Yeah, obviously the tech's not there. So that's not what March 1st is about. So
yeah, I think that's more of a broader opportunity for making it so that it's sustainable and taking us into the future. And quite honestly, we need it. The other part of it too is that like fossil fuels are good for when the sun's not shining, and it's something that I think, and it's a very limited resource when you think about it on a universal scale. And there will come a day where we might not be able to harness the power of the sun for a few days or a few weeks. Like if you have a massive volcanic eruption, or you have some other type of a natural event that causes the sun not to shine. Like I'm here, or cause the solar power not to be as powerful. Like I'm here in Georgia, and I believe back in 2019 or 2020, I can't remember when it was, there was some kind of a massive dust cloud that got kicked up in the Sahara, African Sahara, and it was such an event that you could actually, like, the temperatures for like a week or so here in Georgia, you could see there was like a haze, like you didn't have like a clear view of the sun. The dust was up in the atmosphere, high up in the atmosphere. There was nothing you could do about it, and the sun, you could tell it just wasn't as powerful. Like, it wasn't as warm. It didn't
Same in
shine
Ohio
as bright.
too. I remember that.
Do you? So you have like these natural events that can occur. Like, if we do go to a deploying more solar and stuff like that, you do have situations like natural situations that or events that occur where you might not be able to harness the power of the sun. You know, you have another event like Mount St. Helens, or, you know, God forbid something happens with the supervolcano under Yellowstone. You have some of these events that can occur where you're actually going to be reliant on fossil fuels because solar is not going to work. And so I think at this point you want to conserve as much of that as possible, because you never know when those events are going to occur, and you don't know how long they're going to last for. So, yeah.
Yellowstone is 40,000 years overdue to erupt. It erupts roughly every 600,000 years, and it's at 640,000-ish right now. So,
I'm not. I can't say that it's like a big concern on the radar, but, you know, if it does happen, you're going to need that alternative. You're going to need
So this is what I say.
fossil fuels to take us through it.
You guys are 100% correct. It is overdue, but I worry about what I can control, and I sure as hell cannot control that. Neither can you.
That's correct. That's correct.
You can. It's easy.
I mean, that's exactly the point, is that we can't control, like, who can control, like, dust being blown up out of the Sahara and affecting the solar power in Georgia. Well, we'll be knocking on your door, opinion, if that ever happens.
Yeah, that's our risk mitigation plan. Go to Canada. Hooray.
If we just get enough Wall Street Bets members to meet up in Georgia, and we all just blow really, really hard against the wind, we can fix this, boys. We have the ability.
Open up everyone's mics. We got this.
Is anyone playing Aurora Cannabis?
No, I don't play those types of
after
stocks.
hours?
We've mentioned a couple times today how bad they look, and we have someone who's a permabull as well. So I think most of us think you have a stuck government, nothing's going to get approved, so the American cannabis plays. Like, no, we think that's a very long-term thesis in general.
Tomorrow, it's always tomorrow.
I'm
just like
well.
Moaz.
Just wondering about the puts. Wondering if anyone had any.
You're relying on federal legalization, and God, is that going to take forever?
He said puts, so he gets it. But I think they're expensive from what I've heard. I don't play those. That's me again. It's just kind of a no touch. I got burned on it. Come on, you can hear it in my voice.
I have a couple of hundred shares. I've been selling covered calls on those. I think my basis cost on those is probably like 25 cents at this point. I bought them by selling juicy cash secured puts, and then after I got them, I've been selling covered calls. And honestly, like right now, my basis cost on those is like 25 cents because they're of harvesting those premiums. So. Yeah, if they go away, I'm not really sweating it.
All right, what about PayPal? What are we thinking?
The perma bull, he's gone, but we have both. What do you think about their position? What do you think about? Do you think they're going to gain market share? Do you think they have headwinds against them? What do you think?
Aurora Cannabis or PayPal?
I was saying he said PayPal. I was good.
Oh,
We
PayPal.
talked about the cannabis stocks. I was moving on. I mean,
Thank you.
PayPal.
Thank
We
you.
talked about that too.
They had the PR dilemma, like 3-4 months ago, when a lot of people were canceling their accounts and vowing to never use them again. However, at the same time, I'm seeing a lot of people with Venmo credit cards, and Discover and Visa had pretty good earnings, so maybe they're going to get some of that credit card money. But at the same time, I don't know if that's enough to save their earnings overall. To be honest, I haven't looked into PayPal expected earnings or any of the recent reports, which is why I was curious as to what you guys were thinking.
Yeah, I mean, with all these other alternatives like Cash App and some of these other payment things that you got going on, I haven't really gotten into PayPal one way or the other, but I don't know.
I'm kind of bearish on PayPal. Their expected earnings per share is 120, which is like almost double what their last well, not double. It's like 20% more than what their last earnings were per share. And their P&E is like 40, so that's kind of high. P&E ratio is 40. But I mean, at the 5-year chart, when you zoom out, they're relatively cheap compared to $300 peak. But I don't know, it just doesn't look like a long-term thing, unless you want to play earnings after hours today.
But like now with like Block and Square and all these other, like at one time PayPal was the only sort of online payment system that you had available. But now you got like Square, Block, they've got their little credit card swiper. They also do crypto. Like with Square, you can do crypto, and then you got all these other payment processing opportunities. I mean, it's like the market almost seems to be flooded with different online payment providers and opportunities like that. And I know for our business, we use QuickBooks, and they also have a little swipey thing that, like, we can accept credit cards through QuickBooks, and it goes right into our account. I mean, I really don't see a big advantage to PayPal anymore. I mean, at one time they were the only game, but now there's like a lot of different options that you have out there.
So to me, it sounds like you're saying it's kind of like it's being commoditized, right?
Yeah. And I think the big thing is going to be like, I know from our standpoint, like we have we pay for additional level of customer service through QuickBooks, and I think customer service is going to be the key to those services. Like when something goes wrong, like for example, what happened with Zelle and Bank of America when there was a glitch in their system. Having customer service there I think is going to be the key component of any kind of a play like that. And I'm not sure what kind of customer service PayPal has. I mean, do they have like a call center that you can call?
They're fairly established. I don't know from personal experience, but I don't know. Actually, you can look it up.
That's exactly what I'm saying. It's like I don't know either. It's like I haven't paid attention to them that much.
That's true. It seems like one thing that Cash App is missing is good customer service.
Yeah, just to say, I'm not sure who missed it earlier, but what we were talking about with PayPal with regards to their credit services over the pandemic, that's going to be where I want to see how bad they got hit, because with Goldman Sachs reporting that they lost $1 billion on the Apple Card, with SoFi, Dave, and all these alternative lending platforms like Affirm basically saying, hey, like, we blew up our balance sheet lending credit to people that couldn't pay it back. I don't know if PayPal is in the same thing, but as far as their payment services, I mean, they were in the door early with frictionless payment, and it seems like that's where we're going. So, I mean, fair price target on PayPal for some people is like in the hundreds, and they could issue guidance. They could say, hey, we're cutting staff, and those three things would be bullish from my perspective.
And I was very easily able to attain 4 different numbers for customer service. Depends on if you have unauthorized transactions or missing information. So it looks like they do. It's pretty easy to find.
Cool. That's positive. I mean, I think that's a key. And like what the gentleman was saying there, I'm curious to hear their guidance. I mean, I'd be interested to hear what their shtick is, what their story is.
Yeah, they're like the person said, the EPS is expected to be at $1.20 on $7 billion in revenue. Let me double check.
I'll give you guys the stock I'm bullish on. So the ticker is IIPR. It's basically a play on, manufacturing coming back to the U.S., but it's just a industrial property trust. But I like it because they have a low P&E ratio of 17. and the dividend 7.8. The 52-week low is $81, and the stock is at 91 right now, or 90, so it's a pretty good deal. The 52-week high is 211, but it is real estate, so keep in mind it is cyclical, and interest rates going up, continuing to go up, can hurt the stock. But a lot of people seem to be putting their money here because it does pay a higher dividend. But I'm very bullish on IIPR.
Yes,
I have them in my long-term portfolio too.
Yeah, it's a
IIPR.
long-term.
Yep, I think so too.
it's a cannabis REIT, if I'm reading that right, correct? Well, it is. Since we're talking about specialty REITs, I'll bring up my boomer play, one of my favorite dividend plays. It's lower. It's like in the 4.25, 4.5 right now. IRM, Iron Mountain. They do document retention, both electric and paper, for various financial, healthcare, at least a dozen industries that have different legal holds. So they're good in and out of a recession, no matter what. You got to do document holds, even if the companies close. Companies stay open. They still creating documents. They still need to be held, sometimes for 7-10 lifetime. These things are always there. So that's a specialty REIT I like to put away in a DRIP program, in a tax deferred like IRA or a 401k. So
Yeah, that's a good one. They hold documents for like medical research that you have to hold for a lot longer than like the IRS requires for businesses.
Correct.
I've heard that. Yeah, I've heard that one mentioned a few times, and I think I agree that that's another good one, long term.
Real estate's in a tricky spot because with Powell saying that housing prices are the target of their disinflation campaign, I just feel like when you get into real estate in general, when prices are expected to come down and it's a dividend stock, it's like, sure, I could dollar cost average in and not try and time the bottom, but there's clear economic indicators that in terms of real estate, you're going to be getting better prices in the future.
Yeah, but Jay Powell already said he's not going to sell any mortgage-backed securities at all. So, yeah, I don't know.
Maybe he's going to pull.
Oh, go ahead, Gene.
Sorry, maybe Jay Powell's going to pull a Musk on us, sell him anyways. Pull an Elon.
Yeah, but haven't they been supposed to be like tapering off the balance sheet, and it's going like pretty slow? And then the only reason I say he said he wouldn't is just because of that interview yesterday. I mean, he asked him directly, "Are you going to sell mortgage-backed securities?" He's like, "No, we're not." So,
but that doesn't mean they're not targeting disinflation and housing prices. Like, yeah, they have mortgage-backed securities on their books, but it's not like they overlent similar to 2006, 2007, when they have toxic assets that are about to blow up. It's like, hey, they're super.
Yeah, that's why I like IPRs, because it's an industrial play. I mean, those guys that own these industrial properties are not going to be losing their properties just because Jay Powell raises rates.
True, but when you go into an economic slowdown, it's harder to find tenants to rent those buildings. And you just saw reports across the entire cannabis industry that the people that finance real estate can't afford the debt and they need to get out of these properties.
People that finance properties like on variable rate mortgages, yeah, but that's a very small percentage.
I mean, I think the cannabis growing piece of the business is certainly in Colorado.
And anybody that bought more than 2 years ago has positive equity right now anyway, so yeah, I like they're underwater.
Something to consider with the Fed, and I don't necessarily know what the play would even be here or what would happen. If, in theory, the debt ceiling doesn't get raised, that's going to have an impact on the tools the Fed can put forward, right?
Saying if the debt ceiling doesn't get raised, the Fed has basically said that it is non-negotiable the debt ceiling will get raised. That's the Fed's position.
Yeah, I know that the Fed is saying it's going to happen, and I'm personally on the side of I think it will ultimately happen. But hypothetically, if it didn't happen, right, that opens up then a lot of potential chaos.
So what happened in 2011 when we approached this and hit it? Moody's actually downgraded our debt, so that's not good. We have so much debt on, again, as you guys were talking about shrinking the balance sheet. We've got like 9 trillion in debt, and they were supposed to shred $1 trillion, or shed, excuse me. I hope they don't just shred it. That's my deal. They're supposed to sell 1 million, or at least let $1 trillion fall off with let the maturities, but they were supposed to start selling them this year. So if the interest payments go up because the quality goes down, you do the math, right? We have to pay more now because the quality has gone down.
But I mean, it reprices the entire market, and the whole like idea that when the U.S. sneezes, the world catches a cold is that we are the denomination that is basically the reserve currency of the world. And so, yeah, like let's pretend there's a minuscule chance they don't raise the debt ceiling. Our debt gets downgraded. The rest of the world reacts to that. And relative to the rest of the world, we're still extremely strong. Like it's a temporary thing that is 99% to not happen. And I think that if you're spending any amount of time more than an hour thinking about this, you're wasting time you could be spent doing DD on something more valuable.
But I think it will cause
Yeah, I agree.
near-term volatility, though, as it gets closer. Even with the more than likely resolution, there will be a lot more saber rattling coming up into the following months and weeks up to the actual deadline. So
Sure, and we have election
so
cycles coming up. So
I think
a lot
that's
of the
you know,
a lot of the stuff that people argue about is to put the spotlight on what they're doing. So like when you see the debt ceiling talks go on and Jay Powell says, hey, this is not a big deal. Don't worry about it. This always happens. It's non-negotiable. It's going to get raised. Then you see politicians do what they do. They go back and forth. They try and concede things and take some ground for themselves. It's all part of fucking negotiating. Like, but don't think for a second the market hasn't already priced in that there's a 99% chance that the debt ceiling will be taken care of.
Yeah, I mean, the way I think about it is like if Japan can just keep doing the melt up strategy and basically just keep pushing the can down the road in terms of having bigger and bigger debt, and they are not a world reserve currency, imagine how long the US can do it. And because we have that world reserve currency. Not only that, even if the rest of the world stops using dollars, there's enough dollar denominated debt in the US that dollars are still going to be, worth a lot,
I don't think anyone thinks the dollar is going to zero, but I do think it's an again, I think the debt ceiling gets raised, but I think it's an oversimplification to just say, oh, it'll definitely get raised. Again, we had it not happen, just what, a decade or so ago?
Yeah, we had it happen, but relative to the rest of the world, when we are going through something bad, the rest of the world takes that into account. And then by the time everything gets repriced, we're still strong relative to the rest of the world. So yeah, like, sorry for you guys that bought SPY 420 calls, but maybe things get a little choppy and you never see it get there.
I'm not saying you're going to raise everything to the ground, but sometimes we're the nicest house in the bad neighborhood, right?
Yeah, I mean, I kind of think it's a foregone conclusion that they're going to raise the debt ceiling. I mean, the politicians are always going to use anything as leverage. So it might get ugly or whatever. But at the end of the day, they can't keep playing the game unless the debt ceiling gets raised. So, and that's why Jay Powell put it out on the plate, put the hot seat in Congress was left. So.
I mean, guys, the debt ceiling always gets raised. This happens every couple of years.
It's literally how they play the game. It's going to get raised.
It's like not even worth discussing.
And I don't really think there's going to be any more like big crash, 20% down in the market. I mean, I think it could get choppy and sideways for a little while, but I mean, I don't see like the 2008 style recession or any of that shit. So I think the market's basically going to go sideways for a couple months and then turn around. So and be strong in 2024, 2025. It'll be strong.
And I actually think sideways market is one of the worst things we could have happen, personally, because I think a lot of people are sitting on the sideline on team recession coming, wait for it, and then get in. And if we're stuck sideways, it's going to be a lot of sitting.
Yeah, I think that would be the route of most pain. So.
By the way, Google had hit 95.72 as a low today. Genome, if you hadn't seen that.
So going on to some of the bigger name stocks since Google came up, Bed Bath & Beyond is up almost 6%. So I know that's a very big market mover for the overall meme market. So if you bought in yesterday, you've got yourself a nice 6% return. Remember, the hedgies are underwater and have no chance, and your day will come.
MOAS.
You will get the MOAS so that the hedgies have the no ass.
Quality indicators, quality stuff.
How did everyone digest Robinhood's earnings yesterday? Any thoughts?
I thought it was funny that they messed up that stock split and had to eat all that, and then the executive lost a bunch of stock purchase bonus stuff. Yeah, I thought that was funny. But
Yeah, what was that, like 50 million or something they lost?
oh, it was more than that. They lost like I think it was like 57 million that they lost. They had to buy back all the stock because they messed up the split. I forget the company off the top of my head, but in return, they gave up like $500 million in stock purchase stuff, which again, they didn't have in their hands, and that wasn't cash per se, but they lost all their rights for last year. Such a big miss.
So I saw that they are buying back SBF's stake in the company as well. Is that what you were referring to?
No, that's a separate story. And they may get to buy it back. They're in communication with the Department of Justice and the bankruptcy people. That's not there's a chance that it's going to happen. They're trying to. I'm talking about there was another company that had a split, and the way that they issued it to their customers, they messed up, and because of it, they had to basically spend more than the whole market cap of the company that they messed it up on. There's a big technical error on their part, processing error, and they had to eat it. So the executives got their knuckles wrapped and their executive comp taken from last year.
I'm seeing their net revenue was 380 million.
I didn't look at any of the revenue or anything. I just thought it was the funny stories were funny. I don't really follow it per se, so I'm just adding the color, if you will.
Yeah, I'm curious to see with people trading zero DTs and not just holding underlying shares of meme stocks. I mean, obviously they're still doing both, but the zero DT trend is clearly something the hedgies picked up on. And I'm curious how much more volatile that is for Robinhood in terms of what percentage are they getting of the spread when retail investors buy contracts for 5 cents on Robinhood that they could get for a penny elsewhere. Like how much of that goes to Robinhood? Who are they giving payment for order flow? Like what's going on with that? That's what I want to dive into, but I just haven't seen enough reporting on it. Anyway, I'm gonna enjoy watching these cannabis stocks go down in flames. So y'all enjoy your day. Have a good one.
Thanks, man. Have a good one.
Hey guys, I found an interesting stock. Ticker's MOD. Modine is the company name. I found it because I saw that heat pump sales were exploding everywhere, and this company had some interesting technicals. The it seems to be growing year after year. The stock is steady up in the middle of all of this recession stuff, and they're into like thermal management systems of EV batteries, industrial heat pumps, and HVAC systems, clean technology for the new buildings. But it looks like a really interesting long. You guys might want to check it out.
Chatty group. Everyone licking their chops.
No, I think
No.
everyone's figured it all out. We've all made a ton of money, and now we're just relaxing, ready to retire.
Yeah, I'm choosing the killer for my Lambo and yacht as we speak.
Wait, you guys made money?
Oh, it must have been just me.
Thought we just lost money
Might be
together.
time to wrap it up then. Early day today. If
Thanks for
there's no
pinging.
other plays.
Thanks so much.
All right. Well, thanks everyone for joining, and we'll see you all tomorrow, Friday, February 10th. Thanks for chiming in, guys, and we'll see you all tomorrow again.